So natural gas prices ended down roughly 7 cents on Friday. However, for the previous week, prices were still up roughly 4%. There's a reason for this seasonality at 220. Based on the last 20 years, prices typically bottom around this time of the year and then start moving higher. And that's primarily due to weather. Now, if we go to this article from the weather consultants, how the U.S. weather pattern coming second half of June, what we can see is that national demand, they're talking about natural gas demand, will increase between June 14th and 20th as upper high pressure builds over Texas, the South Plains, the Southwest, with highs of mid 90s to low 100s. Essentially, while the pattern through June 12th and 13th still isn't hot enough to satisfy, the pattern for mid and late June favors increasing heat and stronger national demand, again gas, as Texas and surrounding states heat above normal. So here you kind of can see the jet stream, the high pressure, and where currently we're getting those hot spots. Now, why is this bullish for natural gas? Well, this is a chart showing the temperatures between, this is based on global averages between April 9th and September, and we are roughly right at this area here. So we haven't reached the peak yet. The peak is going to occur in about 4 weeks. But this middle dashed line represents the mean, and you have plus or minus 2 standard deviations. But this black line shows the temperature of this year. And as you can see, it is above not only the mean, but the plus 2 standard deviation. And it's trending to be the hottest temperature on record, at least since 1979. So if we go back to the charts, I did anticipate price moving down further. However, this 220 could be the floor, as within the next couple of weeks, prices appear to be going higher based on the fundamentals, specifically hotter weather. So let's clean up this chart a little bit. I'm going to take this off. This was a resistance support band. I'm going to take it off, and I'm going to take off this red dash line. Now, what would be bullish is if price can close above the 100-day moving average. That would be really, really bullish. Again, the floor remains at $2, as the buyers have been protecting this level multiple times this year. Once in February, a couple times in March and April, also in May. And the fact that price could not get back down to $2, again, this 220 level, again, based on seasonality, might be the new floor. So again, if we can get closes over the next week or two above the 100-day moving average, that would be really bullish for the bulls and price action. If we scroll out to the weekly chart, I do have a first target at $3, but ultimately my midterm target is $3.50, as we do have sellers waiting for price, if price can get back up to these levels here. Again, let's put things in perspective and where we have come from. Just a little under a year ago, prices were at $10. All right. Now the ultimate floor is this daily bias level at 150. However, I don't see price getting here anytime soon, despite the weak demand for natural gas, not only in Europe but also Asia as well. Um, so tomorrow I will anticipate doing a daily, a day trading analysis on natural gas, pending we get some movement overnight into the regular trading session that begins at 9 a.m. Eastern Time. Thanks for watching. Subscribe, please. Like the video.